Ladies and gentlemen, welcome to Kohler Group's expansion into China webinar series. This is part 1 of 10 webinar sessions. The title of today's presentation is Opportunities in China, Selling to the Chinese Consumer. First of all, a short introduction of our topic today. Since China started its reform and opening policy in 1978, its economy has expanded rapidly. At most leading international retailers and manufacturers have entered the China market. Some foreign companies are hesitant to enter the market, however, because they do not understand Chinese consumers and their shopping habits, let alone the legal and tax considerations one has to also make. Despite the country's rapid economic rise, China's regions have developed at different rates, and consumer trends vary greatly among different groups and regions. Understanding the preferences and mindset of consumer groups is the key to successfully expanding a retail business in China. Before China opened its market to foreign investment, commodity availability was limited. Department stores, state-owned distribution points, and wet markets dominated the retail market. International retailers were allowed to enter the market in 1992. But only if they had a non-controlling stake in a joint venture with a local company. In today's webinar, we will be explaining the habits of consumers today and provide a detailed analysis of the variety of distribution channels available to international retailers today, from hypermarkets to shopping malls to wet markets and online stores. Choosing the right format can be critical to business success in China. I'm very pleased to have our director at Kohler Group, Mrs. Christina Kohler-Coluccia, as our speaker today. Before we begin today's presentation, allow me to settle some administrative matters. I would like to make sure that the sound system is working perfectly. If you could hear the introduction and you can hear me clearly, please click the hand button in the control panel, which will give me the signal that we have no technical issues. If you're using your computer and mic and speaker system and you have trouble listening, please note that there is the option to dial in via the telephone by simply clicking this in the audio section of the control panel. Please note that we're recording today's webinar session, and the presentation, together with the recording, will be distributed to the registrants by the end of the day. Ladies and gentlemen, as we do in all our webinar sessions, we do encourage all attendees to submit their questions as well as comments into the questions section of the control panel. The presentation today will last approximately 45 minutes, after which we aim to have a 15 to 20 minutes Q&A. Please don't be shy in inserting your questions or sharing experiences. I will now pass the microphone to Christina, who will introduce Kohler Group and herself, and will then begin with today's presentation.
Thank you very much, Barbara. Welcome to all the attendees and the registrants that may be listening to this webinar session through our YouTube channel later on. I would just briefly like to introduce Kohler Group to all of you that are new to our webinar series. Kohler Group, a CSC company, provides a wide range of market entry consulting in the form of incorporation services, tax, accounting, as well as human resource services. Not only for companies that are entering into the Asian market, but companies that are also expanding throughout the Asian market. Our firm was established in 1979. We have just over 120 consultants, accountants, and legal professionals located throughout our 10 offices in the region. In China specifically, we have 8 offices in the Tier 1 and in the Tier 2 cities. Our main objective is to help companies not only with their pre-investment advisory stage into the Asian market, but also how to implement and maintain their structures once they're created. One of our unique advantages is that we do speak over 10 languages internally, not only the local languages and dialects, but also a variety of European languages and Asian languages as well. Now, a little bit about myself. My name is Christina Kohler-Coluccia. I'm a director at Kohler Group. I've been with the firm since 2003 when I first opened our Shanghai office. Since then, I've grown the business to having 8 offices in total in China, helping Western firms not only with their market entry, but also their expansion and, on a sad note, their liquidations from the Chinese market. I'm also co-author of our monthly magazine, which is ChinaInvest.biz, and I do speak and publish articles throughout the world in relation to expansion into China and expansion locally within the Chinese region. Now let us begin today's presentation. And the first slide that I'm showing to you is the basic questions that I approach my clients with when they're in that pre-investment advisory stage or their planning stage for doing any type of activity in the Chinese market. And I just want to briefly go through with you in terms of these questions, because these are questions you should be asking yourself no matter what stage you are in. And you should continue to ask yourself these questions as you are expanding not only into China, but also into the other Asian markets. The first question is, who am I going to employ to manage my China business? The key points and the key focuses, which I will delve into later on in today's presentation, is, will I be using a distributor or an agent? Will that be my first focus? Will I have a team of people located in my home jurisdiction or in my headquarters that are going to be responsible as regional officers for the expansion into China? Will I second an expatriate into China? And what would be the costs associated with that? And will I be able to obtain the visas? Or, something which is also very common now in the Chinese market, will I localize my business? Will I hire individuals that are already familiar with the Chinese market, have the experience in the Chinese market to develop the business as it moves along? Something now that is very common amongst multinational companies is fostering a dual cultural system, meaning seconding an expatriate that knows the philosophy, the ideals, the objectives of the parent company and what they want to do in the Chinese market, but having also someone on the management that's local, that understands the culture, understands the team of employees, understands how to develop the business. The combination of those two is extremely critical in developing one's business successfully. The only downside is obviously cost. The next step is, what am I actually going to be doing in China? What is my business strategy? And ultimately, what is my short and my long-term goal? Now here you can see on the slide I've added 3 areas: sourcing, sales, and service. Historically, China has always been a sourcing location. And if I look at the inquiries that I'm receiving from clients today, it's primarily, I'm sourcing in China, I now want to sell in China. How am I able to do that? I don't want my customers knowing who my suppliers are, and I want my customers to know that I have a presence here locally. What's the easiest way for me to be able to organize myself in that way? And in terms of service, it's after-sales service. The consumers in China are very attentive, and you need to make sure you have the resources on the ground to provide that after-sales service aspect. Most important question is, if I'm really going to be doing sales in the Chinese market, and I see that as a market for my future, have I protected my trademark? Have I protected my brand? Has anybody stolen my brand? Maybe I need to check on that right now. Now, whenever I meet with clients, it's quite interesting for me because they're very much focused on the short-term objectives. And no one really considers what their plan is in the long frame. And by long frame, I mean 5 to 10 years, which for some people might not seem so long, but it is critical. And why is this critical? Primarily from a legal and tax perspective. Are you building a structure in China that's sustainable and can help you develop the business over a 5 to 10 year time without encompassing or encountering obstacles in terms of administrative obstacles, legal obstacles, tax obstacles, etc. You really want to make sure you build a structure that's sustainable from day one and that you can utilize to build your business as you move along. Why are you really going to China? Have you done your research? And obviously today's presentation will be looking at several statistics and guidelines on how to reach Chinese consumers. But the key is a different market research study has to occur for different types of products. Whether you're selling consumer products, whether you're selling industrial products, you need to make sure you understand the market, that you have a foothold, that you visited the market, that you visited customers, that you understand workflows, cash flows, that you understand what's going on, and how you're able really to penetrate the market on a short and a long-term phase. The next important point is, when are you planning your entry? And the key here is that laws and regulations are changing daily in China. Some of them very much to the benefit of foreign investors, which is not usually highlighted in the media. And therefore people or clients that I have met, they always have a bad opinion about China, that's very bureaucratic, a lot of obstacles in the way. It's not actually true. Depending on where in China you're planning on entering, for example, in the Tier 1 cities, it's very straightforward processes, very transparent processes, very clear feedbacks from the various government bureaus. The only issue is time. It does take time to actually incorporate entities and to get your business up and running. So the key point is, when are you planning to go into the market? What are the regulations at that time of entry? And consider that you may need to update your budgets, your forecasts, if there are changes in various tax systems. So be aware of the who, the what, the where, the why, and the when. Now, brand awareness amongst Chinese consumers, this is a critical point, and it's one of the first points that one has to consider when they're going into the Chinese market and they're looking to sell their goods, sell their services. Not all Chinese consumers are aware of Western brands, are aware of Western products, are aware of all the high-tech products that exist. There has to be a form of public relations that occurs, branding that occurs, marketing that occurs, and you do need to delve into a mixture of sales channels in order for your consumers to know that you exist, that your products are of high quality, that your products are valuable to them, in order for them to buy from you. The issue for many companies is the fact that you have, let's say, I'm rounding off here, 3 billion people. Some in Tier 1 cities where, quite frankly, they've had amazing educations. The individuals have studied abroad, so they're familiar with traveling. It's a whole different market compared to the Tier 2, Tier 3, Tier 4 cities, where perhaps it's an adventure for those consumers to just travel to Shanghai or just travel to Beijing. It's different marketing tactics for the whole region. And the key tip that I want to provide here to the clients or the companies that are on this webinar is, find public relations companies that are locally based in China that can spread the word of your brand and the advantages of your brand and your products and your goods. Make sure you invest in branding, in marketing. For many companies, this is a huge portion of their budgets when they're going into the Chinese market. Social media has been one of the key components today, particularly with the use of WeChat, in order to get brand awareness and even to sell products online. So be aware of how important this aspect is. Now, who and where are your customers in China? As I mentioned earlier, you have high net worth, sophisticated, educated individuals that are really located along the eastern seaboard of China. These are individuals that have high salaries, they're known as high net worth individuals, and they're really going for luxury brand products. You then have to look at the rest of China. Like I said, if you're rounding off, you're looking at 3 billion people. Not just Beijing, Shanghai, Shenzhen, and Guangzhou should be your target markets. In fact, for many product lines, these cities are oversaturated with goods. That it could very well be, after you do your market research, that the Tier 1 cities are actually of no use to you. And potentially you want to start off in the market in the tier 2, tier 3 cities, which is really looking at the mid area, the inland area of China. If you look on the diagram in front of you, it's basically highlighting this mid-tier market that is in bright red. Now, one of the key developments is who should you not forget in China? And this is where, again, market research is important. Looking at statistical data is important. Now, the Boston Consulting Group came out with this statistic whereby there will be, by 2025, 440 emerging cities in China that will hold over 80% of the wealth of China. These emerging cities, let me go back to the diagram, are this red region that you see here on this slide. So keep that statistic in mind when you are analyzing the market in terms of where you should be located. Now, attracting the Chinese consumer. This is not a difficult or complex way of analyzing it. The key point is don't overlook the fact that even low-income consumers have needs they want help meeting. Don't overlook the fact that low-income consumers may be saving their money, their wealth, to buy luxury Western products. Now, in order to track the Chinese consumer, my advice to many of you would be don't rely on media reports. You should travel yourselves to China, not just to the tier 1 cities, but also to the tier 2, tier 3, tier 4 cities. Go and do an on-the-ground search. Travel to the Shikumins. Go into the alleyways of China. Peek through the windows of these traditional houses where you can very easily see what the end consumer has inside. You'd be amazed to see some of these dilapidated houses having flat screen TVs, laptops, iPads, all within their domain. Listen to what they're saying. Make sure you have marketing and branding people that understand Chinese, understand the local dialects, in order to really listen to the consumers, what their needs are. Talk to them. Look at focus groups from various parts within China to understand the needs of not only the high net worth individuals, but also these low income consumers. You need to tailor make the experience. You need to invest in the future and understand exactly where you want to place your focus. Now, whenever you're trying to attract Chinese consumers, there's always going to be obstacles along the way. So I do want to focus on some of the challenges that my clients have encountered. But mind you, not only companies that are selling goods, but also companies that are selling services. The issue is language and marketing. You cannot create a marketing campaign that is focused on Western style. You need to make sure you adapt it to Chinese taste. Now, one key tip or one key advice I would mention here, which you can very easily research but by just Googling it, is if you compare Western style websites with Chinese websites. Western style websites are, for the Western mind and the Western taste, are aesthetically pleasing. A lot of pictures, fewer words. Your goal is the client should contact you. You want to entice them to contact you. If you look at Chinese websites, they are so busy. You see words everywhere. You see small pictures everywhere. It caters to a different taste. And you need to adapt your language and your marketing to the local tastes. Now, by language, this is a critical point as well. Primarily, Putonghua, Mandarin, is the main language that is utilized. But if your focus is to go into the tier 2, tier 3 cities, you may have to utilize local dialects in order to attract the consumers. The next challenge is licenses, which is not really a focus of very many people. Their focus is sales, 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 attracting the Chinese consumer. The key point here is your goods can be stopped at customs if you don't have the appropriate licenses on hand to import certain goods. And we'll go into that a little bit later on. The other issue is price sensitivity. The Chinese consumer loves to shop around. They'll shop around online to look at various pricing. They'll go to the retail stores and compare the pricing. You have to be price sensitive, and a key tip here is do your benchmarking. Look at your Western competitors to see if they're already in the Chinese market, and look at the domestic competitors. What are they selling? What type of quality are they selling? And at what price point are they selling? Intellectual property, this topic is going to be going on throughout my presentation today. Obviously, a big challenge is that there are IP squatters in China who steal brand names, who register brand names before you do. And the key is making sure you register your brand, you register your trademark at the first point that you're looking at going in the Chinese market. So if all of you that are online right now haven't registered your trademarks, research that, get it done before it's too late. Customer service is something that's quite often overlooked, primarily because they don't realize that Chinese consumers love to complain. They love to complain about anything. Not necessarily that they want to return goods, but generally they just like to complain. They love to have a contact person that they can reach out to and discuss something with or make exchanges with. Having a customer service team locally is of vital importance. And quite frankly, whether you're selling consumer products or whether you're selling industrial goods or whether you are a service entity, having people on the ground that can offer customer service in the same time zone, in the languages that are required, it's a great added value service. And it just peaks up the value of your products, the quality of the products, the quality of the service. Consumer protectionism has obviously in the last few years, if you've been following the media, become a very important key point. And again, it's something that's quite often overlooked by clients. Again, whether you're selling consumer goods, whether you are selling industrial products. Understand the consumer protectionism laws. Understand what liability you have if you are selling your products into China. If you are a manufacturer overseas, or you are a distributor selling the goods on behalf of a manufacturer into China, understand in each section of the supply chain, what are your liabilities and what happens if something goes wrong. The last point is labor intensive. People are not aware of how labor intensive it is to create a sales team, motivate, push a sales team, create a marketing campaign that really attracts the clients. It is extremely labor intensive. And especially if you're new to the market, you're learning the market, this has to be a focus for you. Now, obviously, a lot of things can be outsourced. You can go to a public relations firm, you can go to a marketing firm to help you develop that e-campaign, which is probably something that's wise to do in the initial stages. You may want to go to a website developer in China to develop your website, give you tips on how your Chinese website should look like. They may also then give you tips in terms of having online customer service support, which is again an ongoing trend that is occurring. So see what out of all of these challenges that exist you can outsource or things that you really need to do yourself on the ground. Now, before we begin going into steps for consideration in terms of selling and attracting these Chinese consumers or looking at the various sales channels, I've compiled here a checklist, which really is a guide for you to understand the rest of the presentation and for me to just go through 15 points that you need to be aware of. So the first is do your market research. I've mentioned this quite a few times. Understand the market potential, understand what you can do in the market, understand what you can outsource in the market to ease a smooth entry. Do that research. A variety of people do the research in different ways. The first way is outsourcing the market research, whereby you then get a report that is about 100 pages long, and in the end you only read the preface and you don't read the rest of the document. My recommendation in terms of market research is physically having someone on the ground who travels to China and does the research themselves and gets a feel for the market, speaks to the people, looks at focus groups, and gets a real feeling for what is going on. By reading just a market research study, you don't get a feeling of what you need to do. The second point is establishing the right culture from day one. Be aware of the cultural differences. I have a lot of clients who their mind frame is, we're going into China, we're going to implement our Western mentality into that entity, into that structure, and we're going to make sure that Chinese consumers want to follow our Western culture. I don't see this as being successful. I've seen a lot of flops having that perspective. Where I have seen people be extremely successful is adapting their existing Western culture, adapting it to the Chinese culture, implementing that adaptation, that mutt, so to speak, into your daily business, whereby you are a Western brand, you're providing high quality service, but you know you're adapting that product, that service, that e-campaign to the Chinese people. Avoid a lack of attention and communication with your partners and your team. It's very easy for you to say, I'm based in Europe, I'm based in the US, I can't keep up with what is happening on the ground in China. My only answer would be travel to China, do regular visits, make sure you're in daily communication with your partners and your team that you know what is going on in the market. Ethical situations is always a recurring issue, and it obviously leads to fraud, which is something you always need to be aware of. Don't think that just because China is China that you can do things under the table. People are getting caught. There's a lot of inspections that are occurring. Make sure you do things above board. And if you have a gut feeling that a certain workflow, that a certain situation is not making you feel comfortable, or you're not used to doing that type of workflow in your home country, then tell someone. Ask someone for advice before you delve into a situation where you know you won't be able to get out of it. Or you're spending more money fixing that situation than if you had done it right from the beginning. So be aware of getting yourself into certain ethical situations that you just don't want to be in, and you don't want your Chinese partners to then use that as leverage on you at a later stage. Dealing with inexperienced foreign and local staff is always an issue. In today's world, 2016, you want to have the right people on staff that are going to guide your operation and bring you to a successful market entry. So do invest in that, because dealing with the inexperienced foreign and local staff, it won't bring you to your objective, especially if you're on tight time frames. Register your intellectual property, register your trademarks, register your patents, do that from day one. Be aware of the licenses that are needed. Ask questions in relation to your products, and understand how can you bring your products into China. If you're already selling in the Chinese market, then this is really not an issue. You still need licenses, but it's much easier if you're producing in China and you're selling in China to just keep everything within the Chinese border. Be aware of any type of government interaction. And the key point here that I want to state is, if you don't have it in writing, you don't have it chopped, don't believe what the government officials are telling you. Make sure you have everything in writing. And a key point in China is the chops. If you don't have something chopped, then don't believe that document either. There's so much turnover within the various government offices that although you've made a deal with someone, it doesn't mean he'll be there forever. You need to make sure that whatever you've discussed, whatever you've negotiated, has to be in writing. Make sure you vet your suppliers, make sure you vet your customers, make sure you vet your partners, make sure you vet your service providers. The best way to vet is by traveling to China and visiting them yourselves, seeing them eye to eye. The number of inquiries I receive from people that have utilized Alibaba, global sources, etc., have lost money on deals, have shipped products and never received payment. It's an ongoing existing issue. So make sure you vet all the people you're working with. And obviously the key point is vet them because you are not on the ground. There are time zone issues. There is travel distance between you and them. If you are establishing structures in China or you're utilizing distributors, do health checks, do internal audits, ask to do reviews. Don't be afraid to ask for these things in order to make sure that the relationship stays strong between all the partners that you're working with. Appoint directors and senior management personnel that you can trust, that you know won't be quitting their jobs anytime soon. Make sure you have these people in place to avoid any of the bureaucracy that has to occur if there's turnover. Assess internal controls, actively monitor controls. I think the key point out of 12 and 13 is create internal control systems, create, monitor control systems. Have them in place. Have workflows in place in order to guide you and make sure that, systems are running smoothly. Develop a fraud response plan. This has been something that's not always easy to create, especially if you're a small, medium-sized company. My tip would be the following. Travel to China. Meet with the various people that you're working with. Meet with them on a one-to-one basis. Invite them out for drink. Invite them out for lunch. Invite them out for dinner, just so you get to know them, you build confidence with them, and if anything goes wrong with distributors, with clients, with customers, you know that they will contact you because you build a rapport with them. So if you're a small, medium-sized company, you may not be able to build such a detailed fraud response plan, but you can build trust and loyalty with certain staff and gain their response and give them the ability to contact you directly if they want to. And last but not least, obtain advice. Again, it's 2016, but I still get a lot of inquiries from people who have trusted a new employee to build their structure, build their objectives, and in the end, nothing has come out of it. Fraud has been going on for quite some time, and it's their company name and their brand that is then affected. So obtain advice. There are thousands, if not millions, corporate service providers, lawyers, headhunters that are all in the market. They're all Western owned, they're all Western managed, that can guide you in terms of any advice that is needed. And a key component here, and again, this is out of my 13 years of experience in the Chinese market, really, it's going to save you money if you get advice from day one versus if you don't get the advice, you believe in the staff you've only just hired, and you get advice later on when problems already exist. Fixing problems in China takes time, takes money that you maybe don't have. And it causes a lot of companies to then liquidate and exit the market. So be aware of these 15 checklist points that are just tips for your entry. So when you are selling into the Chinese market, we started today's presentation by looking at the Chinese consumers. How are you going to attract them? What are the challenges that exist around the consumers? Now the issue is trade flow. What do I need to know to bring my goods in? If you are manufacturing overseas and you want to bring your goods into China, you have to understand the licenses and the import regulations. You have to understand that for a variety of products, certain licenses will be required. And the key point is understanding what is the time frame to obtain those licenses. In many situations, for example, medical products, it takes at least 1.5 to 2 years to get certain licenses. And there's still no guarantee that through the clinical studies that you'll obtain it. So be aware, investigate your product, investigate how you can import it, investigate timelines. And if these timelines don't suit you because they take so long, then you might want to consider utilizing distributors for an interim period. Understanding customs clearance for importation. Now the key point here is obviously if you're importing your goods, you're going to be utilizing either a freight forwarder or you're going to be utilizing an equivalent of a DHL, FedEx, TNT, high-speed delivery service. Now, most of the questions in relation to customs clearance should be directed to your freight forwarder or these courier services. You need to understand what are customs duty rates. By finding out customs duty rates, you do need to provide the 8-digit HS code of your product. You need to research very clearly how to define your product in order to obtain that 8-digit HS code. You need to understand that customs duty rates are updated on the 1st of January of each year, and there's a book that is issued by the Customs Bureau in order to verify the rates for this year. Be aware of quota systems, if any, based on your product, not that your goods are going to be held up in customs. Be aware of new high-tech products that are currently not being sold in the Chinese market and being stopped at customs. What do I mean by this line item? Basically, if you have a product, a high-end product that is not being sold in the Chinese market, is not even being produced in the Chinese market, you may have issues at customs. And what I mean by this is that the customs may halt the goods, may ask for additional documentation such as blueprints, manuals for how the products are to be used, not necessarily because they need those to clear customs, but potentially to sell off those blueprints and those manuals to the highest bidders to be able to produce those products locally in China. So be aware of that. Be aware of customs being stopped, and ask these questions ahead to your freight forwarders and to your courier companies. If you're focusing on e-commerce and you are planning on selling your goods directly to Chinese consumers from Europe or from the US, and you're utilizing these high-speed courier companies to do the shipments, then you also need to approach them on any other issues that may arise with customs. For example, there have been common trends that if the product is worth more than 10,000 renminbi, the equivalent of 10,000 renminbi, it will be held at customs and the end consumer will need to go to the Customs Bureau to pick up the product. Understand these types of limitations and make sure you ask these questions to your freight forwarders, particularly before choosing on a freight forwarder or on a high-speed courier company. Value-added tax applicable on importation. If you are importing goods, you need to understand that value-added tax or VAT will be applicable. So if you have an entity already established in China, then be aware that this has to be paid together with the customs duty. You have to understand whether you're a small-scale taxpayer, general VAT taxpayer. You have to understand what are the regulations in terms of VAT payments. Again, value-added tax applicable on importations is a question you should raise with your freight forwarder or the high-speed courier companies. Don't forget to add that into your list of questions. They should be able to answer it, and they should be handling the customs clearances as well as the VAT applications or declarations as well. Now, I mentioned this earlier, looking at product liability and consumer protectionism laws. I think one of the key components when going into the Chinese market and selling to Chinese consumers or selling via distributors is making sure that there are clauses within the contracts that protect you against product liability and consumer protectionism. These laws have recently been updated. They also include e-commerce platforms, where the platforms are also now responsible to make sure that the products they're selling are have no liability associated with them. They've tested them. So be aware of this. Ask questions when you are selling them in the local market. Talk to lawyers about how to best protect you, and understand the liability all along the supply chain, all the way from the manufacturer overseas or the manufacturer domestically to you as the sales agent or you as the distributor, and then the consumer or the customer. Be aware of it. Now let's start looking at the various sales channels that exist. And I'm going to go step by step through least commitment, least risk, less profitability, all the way to high risk, high commitment, but more profitability. And the first item that you see in front of you is no representation in China. What I mean by that is you yourself are not representing your brand locally in China. You do not have an office. You're doing everything from your home jurisdiction, meaning potentially you're doing trips, business trips to China to meet with customers. You may have allocated certain distributors to work with you. Now, here are some tips about distributors in China. And again, you can read up on this through Google. There's tons of information available. My suggestion is the following. Do not sign exclusivity agreements. Generally speaking, a distributor that is based in Shanghai will not be able to distribute your products in Chengdu or Chongqing unless they physically have offices in those locations. And you should vet your distributors. Check, do they really have offices in Chengdu or Chongqing? You really want to work with distributors that have physical offices on the ground in the regions that you want to focus in. If you don't, or if the distributors don't have these types of local presence themselves, don't expect results. It's going to be very difficult for them to achieve those results. And as I mentioned earlier on in the presentation about these Chinese consumers, the Chinese consumer, the puzzle of the Chinese consumer, it varies whether you're in a tier 1 city, tier 2, tier 3, tier 4 city. You want to test your distributor to make sure that he understands that he's developing e-campaigns, marketing campaigns to really attract the variety of consumers that exist within China. Now, a key component that's been raising trends lately is the fact that people are also looking for distributors to sell not only in China, but also into the Asian market. But again, a lot of difficulty. Asia is enormous. You want to have specialists on the ground that know the market inside out to be able to promote your product. Now, signing exclusivity agreements is always a difficult issue, and signing open-ended agreements also causes a lot of issues. You don't want to be on open-ended contracts. You want to test the markets with these distributors, see how it works for the first few years, see how viable they are. One of the key case studies that I have actually is that there was a high-end luxury decoration company going into the Chinese market, and they were asking questions to their distributor. The distributor was pushing them to sign an exclusivity agreement, and they said, okay, well, can you, before we sign any type of exclusivity, could you outline to us your campaign? How are you going to market our products? What is your marketing plan? Second point is, can you provide us with the price points at the malls or at the retail shops? What is your margin in the end of the day? And the distributors didn't want to reveal this information. And the key point is that if your business in China is successful, if you're growing, at some point you will want to eliminate the distributor because you'll want to win that margin that they're earning. So you need to have clarity and transparency with your distributor in order to really understand how the goods are being sold, how the goods are being imported, how the goods are being marketed, and what are the price points at the end of the day in order to be able to do it yourself. You may never want to eliminate the distributor because it could also be that in certain product types, the distributor has certain connections, certain guanxi, certain relationships with customers or end consumers. So you may never want to eliminate it, but at some point you will want to take more control into your hands. And again, transparency is a key issue whenever you're wanting to work with distributors, whenever you're wanting to work with your clients. Now, the second sales channel, and this is a question, again, I get often, if not all the time, is I'm scared of China. I'm not ready to make that investment yet because I actually do have to invest a certain level of capital. What can Hong Kong offer to me? Because I feel that Hong Kong is more westernized. I feel the ease of operating in Hong Kong. What can Hong Kong offer me in terms of being able to sell in the Chinese market? Well, all of that is true. Setting up a company in Hong Kong, it's easy. The regulations are common law regulations, so they're very similar to British standards. The laws are transparent. You can set up a company very quickly. The only dilemma in Hong Kong currently when you're looking to set up entities are bank account openings. The know your client processes by the banks are becoming very stringent. It's a lengthy process to open accounts, not easy. So you have to be aware of that in terms of timeline and time frames. But as a starting point, the advantages of Hong Kong are quite simple. You can bring goods into Hong Kong, generally duty-free. Certain products will require duty to be paid, and you're looking at tobacco products, etc. But otherwise, for most other products, there's no duty. Disadvantage is cost. Warehousing cost in Hong Kong is high. And one big clarification point, which a lot of people don't realize, Hong Kong is still not China. So even when you're selling to China via Hong Kong, your Chinese client, the end consumer, they still have to go through customs clearance. You still have to import that good into China. So Hong Kong, I think, is a fantastic middle ground for a lot of people to start their operations, to feel confident that they're not investing too much risk and commitment, that they can have staff on the ground in Hong Kong to build the business. But you have to be aware that people in Hong Kong still need visas to travel to China. But obviously, in terms of distance, time zone, it's still close by. So definitely, as a starting point, setting up in Hong Kong is a middle way to develop the market. In addition to all of that, if China, and this is the case for many people, if China is not your only market that you're looking to go into, then Hong Kong can also be a great regional hub for other Asian markets. So if China is only just one out of 3 or 4 markets you're looking to go into, then be aware that Hong Kong could be an excellent location to develop in these other regions as well. The third sales channel is obviously selling direct from China to China, establishing your own entity in China. I don't want to go into too much detail about the pros and cons of establishing an entity in China because we will be having a webinar session on establishing a legal presence in China and what options are available to people. But obviously, having your own entity in China, having people on the ground in China, the proximity and the image and the prestige of having a Chinese office address, that just builds the confidence, obviously, with your clients. And that's a very key component. So you should be aware of the differences in terms of image, ease of operation, and what is then important to you as a business that is developing in the market. Now, one of the key advantages of having your own operation in China is this whole concept of VAT invoicing. Many customers in China may require or may ask you to issue a VAT invoice. This is a value-added invoice, and only Chinese companies can issue these types of invoices. A Hong Kong company, for example, cannot. So you also have to understand what are your customers' wishes. What do your customers want? How do they want to control the payments? How do they want their invoices? These are all questions and negotiations that have to occur with them as well. Now, e-commerce, big topic. Everyone is talking about it. If you read the media, journals, or you look in the news, everything is about how to approach the Chinese consumers via e-commerce. And currently, this is really the best method. If you look at all of the statistics today that is out there, basically, e-commerce is the way to meet all types of Chinese consumers, from 15-year-olds all the way up to people in their 60s. It's less of a headache to build up an e-commerce structure, but you need to look at the various models that exist and the disadvantages, advantages that exist around them. Now, developing an e-commerce approach where you're being outside of China, quite frankly, it's obviously less commitment, less risk than if you develop your e-commerce channels inside China. If you want to have a .cn domain name, and this is really the critical point, you need to have an entity registered in China. So you need an entity registered in China. You need to submit the business license in order to be able to get a .cn domain name. If you want to utilize this .cn domain name to sell to Chinese consumers, then you also need to apply for an ICP license. An ICP license is an Internet Content Providing License, and it allows you and gives you the flexibility to be able to sell online. Now, since January 13th, 2015, all foreign investors that establish their entities in China are able to obtain an ICP license. In the last 12 months, there have been mixed results in terms of that. Some companies have been extremely successful in obtaining the ICP license, others less so. As a consequence, many people are using what we call VIE vehicles in order to be able to do e-commerce in China. And what that basically means is you are obtaining a Chinese individual or a Chinese corporate to obtain the .cn domain name and apply for the ICP license under their name. So they're kind of a silent partner, so to speak. You may have to then pay them a fee. The critical point is, if you ever want to exit, similar to a distributor, like I mentioned earlier, if you ever want to exit that relationship, how do you do it? And can you rely on the fact that this guy or this corporate will sell you back that domain name? So key points to consider. And please be aware, the presentation will be distributed to all of you, so you can read through the slides in peace and quiet once the presentation is over. Now, everyone is aware of the top e-commerce channels, but I think a lot of people are not aware of everything that exists out there. So I did want to provide you all with an overview of several e-commerce channels. Everybody knows Taobao, everybody knows Tmall, but I don't think people are aware of everything else that exists in the market. I also think people are not aware of the cost to be able to sell via these third-party e-commerce platforms. Anything that is associated with Alibaba, so if you're looking at Tmall, Taobao, the cost of having an online shop with these sites, with these platforms, is extremely expensive. And you need to do your benchmarking. Understand the cost of having these stores online. What is it going to cost you to sell? And more importantly, understand the services that these e-commerce channels are offering to you. Are they going to be doing warehousing on your behalf? Are they going to be doing the logistics on your behalf? How are payments going to work? How are you going to get your funds on the sales? How is marketing done on these channels? Do you have to invest resources to develop the marketing on these channels? A lot of questions being raised here. But this is all part of the benchmarking and the market research you need to investigate in order to understand how valuable these e-commerce channels are, and also understanding that maybe you want a mixed sales channel that exists. So I do want to highlight a little bit a case study or case studies and what we are seeing in China in terms of the fashion industry primarily. What are the big luxury brands like Chanel, like Dior, like Burberry doing in order to attract Chinese consumers and expand in the Chinese market? Now, I would say 5 years ago, I think it was a competition amongst all of these luxury brands to see how quickly they could open physical retail stores throughout China. Obviously, they started in the Tier 1 cities, Shanghai, Beijing, Guangzhou, Shenzhen, and then they started developing into the Tier 2 cities. Dilemmas and challenges that arise for them, and I'll give you a case study on this, is that one high-end luxury brand decided to be on the ground floor of a mall in Hangzhou, and the mall decided to put a fast food chain next door. Now imagine this image. You have a Dior, a Chanel on the ground floor, and next to it you have a McDonald's, a fast food operation. It just shows that even the malls within China, they just want the business. They want the rent. It's not like in Europe where the focus is, okay, on the ground floor, let's focus on luxury brands in order to entice and attract people into the mall. It's a very different concept, and this is where the challenge exists, and this is where you need to have public relations, branding, marketing people on the ground to advise you on that, to guide you with the challenges that exist when dealing with the malls, dealing with the various retail outlets, dealing with landlords, understanding how lease agreements work when you are opening retail shops. Now, as e-commerce started booming, what a lot of these high-end fashion brands are doing today is the following. They're cutting down on physical retail outlets. Why? Because of the following reasons. One, rent is increasing in China, particularly in the Tier 1 cities, but also in the Tier 2 cities. Two, finding responsible retail staff who speak multiple languages, multiple Chinese dialects, are educated enough to be able to sell these high-end luxury products, it's tough, particularly in the Tier 2, Tier 3 cities. And the standard of the staff is what is lowering then the image and the brand of these high-end luxury brands. So what they're doing is they're cutting down on the retail outlets in these tier 2, tier 3, tier 4 cities just because it's so hard to control and maintain. It's not that they're not going into those cities. They are. They're just not expanding at this rapid rate that they used to in terms of opening these outlets. Where are they therefore putting their focus? E-commerce. They're developing their own e-commerce platforms, their own websites. They're utilizing social media platforms like WeChat in order to promote and build the brand and even sell their products via WeChat. They're looking also to develop their brand overseas, which a lot of people are not considering. If you look at the tourism industry, most Chinese individuals are looking to travel outside of China. They're going to Paris, they're going to Milan, they're going to Frankfurt, they're going to Munich, they're going to London, they're going to New York, they're going to Chicago. And what they want to do is buy these high-end luxury fashion items there because they get VAT refunds when they leave the country. So there's a variety of ways to attract these Chinese consumers, both domestically at home as well as abroad in your own home jurisdiction. But e-commerce, it's a great component, and people are really focusing on that. Another interesting aspect that I find, which is quite a subtle aspect in my opinion, is advertisements, their public relations and their branding images. Whereas previously, a lot of the Western actors, actresses were promoting the brands, they're much more focusing now on Chinese actors, Chinese actresses, Chinese athletes in order to be able to promote the brands. They're also looking at certain franchises. So if you look at Harry Potter, for example, several of the actors and actresses, since Harry Potter is so popular in China, they're utilizing those actors and actresses in order to promote the brands as well. Very subtle marketing tactics, but it is working, and it is a key component. So just looking at what the fashion industry is doing in China, how they've changed their goals and their objectives and their strategies is something you need to keep in mind, particularly if you're a mid-tier brand. Now, my final slide today before going on to the Q&A session is what is really the importance of having a local representation? What are the pros and cons? Obviously, with the various sales channels I went through, you have options of having no representation. You have options of going a middle way in terms of having something in Hong Kong, or you say, no, I'm going to commit to the market and I'm going to have people on the ground in China. I'm going to give you from my perspective what is the importance of having a local representation, and I have a variety of advantages listed here. The first is having an Asian presence. I mean, just simply having a registered office address in China to show that show your customers that you are there, that you are committed to the market, that you want to be there, and you want to sell to them. It shows prestige. It shows also control. Now going on to control, it gives you the opportunity by having a local representation to have a feeling of the market, understand what's going on. Is there a downturn? Is there not a downturn? How can you increase sales? Walking in the streets, you have a feeling of your end consumers and what's going on. You have the flexibility of traveling throughout China and obviously expanding into the Asian region as well. Prestige, particularly if you're a mid-tier brand or you're a high-end luxury brand, it is prestige to say you are there. It's important to say you are there. Being able to get bank credit facilities, being able to develop low tax structures, being able to then market internationally that you have a local presence. Types of confidentiality between your customers and yourself. Developing communication channels that are within the same time zone. Having people on the staff that speak the local dialects. These are all critical points. Warehousing and delivery times. Key point as well. Being able to deliver your goods at the time of sale, it's vital. If you can deliver a product within 1 day of an order being placed, fantastic. It only develops your prestige, your control within the market. And then obviously being able to sell in local currency, key component. People are receiving their salaries in renminbi, they want to pay in renminbi, and that's it. They don't want to pay really in US dollar or other types of currencies. So having a local representation obviously can only bring you benefits. But in today's world, obviously, with the financial crisis that occurred in 2008, 2009, and obviously there is an economic downturn occurring in China at the moment, it is a consideration that one has to make whether they have the investment capital and the resources to develop a local representation. And obviously the key is starting slow, understanding the market, developing your market research. But ultimately, the goal of anybody should be to have a local representation in order to be successful. So Barbara, that was the end of my presentation today. So I think we can just lead on to the Q&A and whether any questions arise.
Okay, Christina, there are a series of questions that have come in during the presentation. So let's start with the first one. What effect did the devaluation of the yen have on the business market, and what effects would it have in the future?
That's a very good question, and I sort of raised it at the end of the presentation today. Well, first of all, I think let's look at the economic downturn. We all know that there is a downturn in China. The growth rate is decreasing. But I think one component that we all need to realize is that the forecasted growth rate for 2016 is approximately 6.5% to 7%. This is still much higher than most developed countries. It is still quite a significant growth rate to be able to grow at 6.5% and 7%, and I think one should not forget that. So although, yes, there is a downturn, there is still a growth. In addition to that, one has to look at regional variations. And again, this all comes down to then your market research. So the 6.5%, 7% growth rate is for all of China. But if you look at certain cities and how they're growing, for example, Chengdu, Chongqing, Tianjin, Wuhan, Nanjing, most of these cities are growing at double-digit growth rates. And obviously, the Chinese government is giving you a variation, 3 billion people, of 6.5% to 7%. But you need to delve in and look at the various cities, whether it's in the tier 1 or tier 2 cities, to really understand what are the growth rates for certain areas. And in those areas, you might want to focus your market entry, just because the growth is so much larger and is double digit. In terms of the renminbi devaluation, I haven't seen any issues locally. I still see people buy, and again, this is my perception. I still see people buying, particularly via WeChat. That's the most significant. If you look at the statistics of the Chinese New Year, Valentine's Day, e-commerce is surpassing China, surpassing the U.S. So I personally don't see a downturn, but this is something, again, you should talk to other people in the market depending on the products that you're in, and it should be part of your research as well.
Okay, so let's go on with the second question. Regarding direct sales to consumers online, can items easily be posted into China? And what are customs implications or tampering with items?
So as I mentioned earlier, if you are selling via e-commerce and you are using these fast courier service companies like TNT, DHL, one of the key questions you have to ask is, will there be any stoppage at the customs? Meaning, depending on the value of the product, depending on the type of product, will there be any issues arising from the Chinese customs bureaus? As I mentioned, for many of high-end luxury products that are being imported, they are being held at customs, and the end consumer is required to visit the customs bureau in order to pick up the goods. So that is something definitely to keep in mind. Tampering with goods is something that I have not had any experiences or complaints about. The level of the logistics industry in China has increased tremendously. So whereas previously you see people on motorcycles or on bicycles delivering packages, you don't really see that today. You see people in motorized vehicles or vans delivering packages like you do in the Western world. So I don't really see issues in terms of tampering or people opening packages beforehand. Obviously, at the Customs Bureau, is there tampering? I think that depends on what you have qualified in the bill of lading or in the freight forwarding documents as to what it is. Obviously, there will be inspections that are randomly made, and you may have dogs that are smelling the packages, etc. So this all does happen like anywhere else in the world. I have had personal experiences in the U.S. where my packages have definitely been opened by the U.S. Customs Bureau. So I think it's something to expect in China as well, but it's a precaution that they are making.
Okay. Another question that came in is the third one. What sources exist for finding the adequate distributor? How easy is it to select the right partner?
To find distributors in China, I think it's relatively simple. My first approach and my first recommendation would be to attend trade fairs in China, or even to attend trade fairs in your own home country and jurisdictions to see who exists, who's exhibiting, are there distributors that are exhibiting, and then meeting them on a one-to-one basis. That would be the easiest solution. You also have solutions like globalsources.com, alibaba.com, where you can also find distributors through that avenue. But again, you need to vet them. You need to travel to China, meet with them, and see what their capabilities are before you actually sign agreements with them. How easy is it to vet distributors in China? Where you can most certainly do background checks to see whether they are real, whether the companies are real. That would be the simplest solution and very quick to do. So one would be trade fairs, and the second would be to do due diligences, background checks on these distributors to make sure just are they real? Do they really exist?
Okay. So the fourth question, as we're not dealing with customer products, but with industrial products, how should we proceed in terms of the distribution channels mentioned?
If you are selling industrial products, the sales channels actually don't vary. You can still go into China with no representation or utilizing distributors. That's usually the primary way people will initially enter the market. The second is utilizing a Hong Kong company to aid in the sale of the goods. And the third is then also physically setting up your own entity in China to import and sell domestically. So whether you're selling consumer products, whether you're selling industrial products, actually the types of sales channels are relatively the same. And in addition to all of that, what might surprise many of you is that e-commerce channels are now being created to sell industrial products for B2B business. So you should be doing your research to check on that type of avenue as well and how it works.
Another question was the following. Are cultural differences important?
Absolutely. Cultural differences are a key component in being successful in the Chinese market. Understanding and what's a key component is not just looking at the superficial level of the Chinese culture, it's also a matter of looking in depth at the various regions within China, the different religions that exist in China, the different tastes, the different dialects. It's very important to make that analysis. I always say that China is made up of a patchwork quilt where you have really very different designs that make up China. So the cultural differences are of vital importance, which is also why I emphasize finding local PR firms, marketing firms to aid you in that step.
Mm-hmm. So the sixth question is, what's the best season to jump into the market?
That really will come down to your product. I can kind of give you a case study on that, I guess. In the summer months in Shanghai, it goes up to 40, 45 degrees. And there was an article that was issued last summer from China Daily highlighting the biggest products being sold. Number one was electronic fans, primarily from office workers buying the electronic fans because there were power outages for the air conditioners. The second was mosquito nets that were utilized at home. I think the third was food delivery service companies because nobody wanted to go outside to the restaurants. So I think it really comes down to your product. If you are planning on going into the market and you're planning on setting up a gelato store, I wouldn't recommend you to set it up in December. You should really think about making sure that your grand opening is in April or May in order to make sure that you cater to the summer months. So I think in terms of the best season to enter the Chinese market, it really comes down to your product and, what would you also do in the Western world in relation to that?
Okay, so we already have the last question for today. Are the Western style marketing and product images appealing for Chinese consumers, or should one do a localization of marketing?
So I had mentioned that earlier on in my presentation. On one level, you do want to show that you are a Western product and that you are a Western brand, but you do want to localize that imagery to the tastes and the cultures of the Chinese market. So you do want to have a mixture of both, actually. When you're developing your website, you definitely want to view and research how Chinese websites are and how successful they are, how messy they look, but it's the way to be successful. And obviously that doesn't relate to Western websites, but if you can still maintain the product imagery and all of that to Western styles and Western tastes. So really it's a mixture of both. You really should localize but still maintain that Western brand image.
Okay, so unfortunately we do not have enough time to answer all of your questions. But in case you have further questions or want to talk about your individual cases, please contact Christina privately after the webinar. Here on this slide you can see your contact details. You will be receiving a copy of this presentation together with Christina's contact information. We hope that you enjoyed this webinar session. We just want to remind you of our upcoming webinars in this series, which you can see on this slide. If you're interested, please register for the webinars on our website. The recording of this webinar will be posted on our YouTube channel and distributed on our social media sites, such as LinkedIn, Xing, and Twitter. In addition, if you're interested in our weekly e-campaign highlighting all the latest resources we publish, do not hesitate to subscribe. It is free of charge and can be easily done on our homepage by inserting your email address into the section called chinainvest.biz. Thank you, Christina. Thank you for presenting to all the attendees and registrants. Thank you also to all for joining us today. We look forward to seeing you again soon. Have a pleasant evening and goodbye.